Canada added more than 60,000 jobs nationwide last month. That's much more than expected. So what does that say about the state of Canada's economy? Let's ask Andrew Hencic, senior economist at TD, joining us live. Thanks for your time.
Thank you for having me. Pleasure to be here.
As I mentioned, this is way above what most analysts were predicting in terms of numbers. Were you surprised by this? What's your reaction?
Definitely surprised. 60,000 job gains, really strong print. Um, you know, the real, additionally, 70,000 basically new people entering into the labor force. That was a really surprising move with the participation rate rising. The unemployment rate, though, still steady. A slight uptick was expected, so the less movement there wasn't quite as shocking as the top line numbers.
And unemployment rate for youth aged 15 to 24 ticked higher to 14.7%. I mean, what do you make of those numbers for young people in this country?
Well, look, the top line unemployment rate was unchanged. So this is still a labor market that has some slack, some slack to it, right? And anytime the labor market has slack, young people tend to bear the brunt of it. And so, with the circumstances being what they are with the economy and with a labor market that's still kind of treading water in this space that's not exactly booming. An uptick in the unemployment rate there, not all that surprising.
Yeah, because, I mean, StatsCan says that this shows that Canada could be resilient in the face of U.S. tariffs. But it sounds like you're practicing some kind of cautious optimism here, like this is good news, but we could maybe still see some changes down the road. Do you think that that's true, that Canada has seen some resilience?
Well, it's hard to say that there's been no resilience. This is a pretty large shock to our economy, and the unemployment rate has risen. That being said, it hasn't shot drastically higher, and so you kind of take the good news with the bad here. And the good news is that, yeah, the unemployment rate did not rise this month, and that in and of itself is a nice piece of information to know that the economy was able to withstand it. Now, our view is still that the unemployment rate does have a little more space here to creep higher. We think the labor market is still relatively loose, and that growth will slow down here, meaning that there is still a little bit of downside here to the labor market in the months to come.
Okay, so let's talk about some factors that could contribute to this. We'll start with the unemployment rate, holding steady, because I take your point. It didn't go up, but it is still where it was. What do you think is contributing to that?
Well, I think to a certain extent, we saw outright job losses the past 2 months. So the plus 60K this month was good, but not enough to fully offset last month, which was minus 65, and then a minus 40-ish the month before. So there's still some reticence there on the part of firms to hire. There's a tremendous amount of uncertainty that's kind of lingering over the economy. So questions about expansion plans, rehiring workers that may have left, these things are still indicative of an economy that's kind of treading water. Even StatsCan noted in the release today that relative to January, we're still up a net only 22,000 jobs, right? So it's kind of stall speed treading water, and the associated impact is that the unemployment rate is gradually rising, given that we do have entrance into the labor force.
Mm-hmm. Let's talk about the jobs that were added, though, because there were, more than 60,000 jobs added. What sectors and areas were those jobs added in? Are we talking like manufacturing? Are we talking healthcare? Where are they?
Yeah, so the gains were concentrated in manufacturing, really strong print, 28,000 there. Healthcare and social assistance, another 14,000, and agriculture also kicked in another 13. So pretty strong prints, and with the manufacturing sector exposed, to say the least, to the U.S. economy and to the trade frictions. It was nice to see the agricultural sector as well, a nice healthy print there. Not so good information on the wholesale and retail trade, minus 21,000, or the construction sector. But on net, an economy that showed a little bounce back in September, and it is nice to see.
Just lastly, StatsCan is saying that this could maybe affect the Bank of Canada's rate cut decision next month, whether they do cut rates or whether they don't, or at the end of this month, rather. What do you think? How do you think this will play into that decision by the Bank of Canada?
Our view is that this has probably raised, put a little more pressure on the upcoming CPI report. The bank's going to need to see, some softening in the momentum in the underlying inflation measures in order to feel comfortable about cutting. The expectation was, again, as we mentioned, that the labor market would continue to soften. That has not happened. It held steady in September. So there needs to be, it's a pretty high bar in terms of the evidence that we need to see from inflation in the next report to really get the Bank of Canada thinking about another cut in October.
Okay. Andrew Hencic, senior economist at TD, joining us. Thanks so much for your time. I appreciate it.
Thank you for having me.